Our focus now is on the fixed income segment of the market. Wale Olusi, investment analyst with AfriInvest, joins me now. Good morning to you, Wale.
Morning, Harriet.
So, activities in the Treasury bills space closed on a bearish note yesterday. Still cautious trading by investors?
Well, cautious trading, but I think what happened yesterday was largely partially because some investors were expecting the rate that the primary auction quoted yesterday for the Treasury bills market to be higher. So there was a lot of sell-off, hoping that they will get something more from that market. But apart from that, there's been a lot of caution. The amount of liquidity in the system has been squeezed. I think as of yesterday, total opening balance with banks was about 120 billion, and then compared to over 371 earlier in the month. So I think there's a lot about liquidity affecting the bearish sentiment in the fixed income market as a whole so far.
But then we have about 110.94 billion naira expected to be retired into the banking system today through maturing Treasury bills. So would this kind of improve the mood around the bills?
Yeah, well, what that simply means is that an amount is maturing, but the central bank is also rolling over another, so it's likely going to have that it's going to offset each other, because the same amount that is maturing is also going to be rolling over, so it has almost no effect on liquidity. But we think the impact of the higher inflation, the expectation about MPC next week, I think that those are some of the big issues for investors. They reprice assets in the fixed income market at the moment. I mean, a lot of pressure coming from inflation. Real returns, have been largely depressed by an inflation that is nearing 14%. With the highs coming from oil prices, the inflation number is expected to probably cross 14% come May figure. So these are some of the big issues for investors, actually, in the fixed income market, where real return is something they are really concerned about.
Is that the concern that is also reflected in the bond market? Because yesterday it remained broadly bearish, and we saw average yield rising by about 0.34%. That's about 34 basis points to 13.84%.
Yeah, definitely. Partially, that's also due to the amount of liquidity in the system. But if you look at how the repricing of bond assets, looking at the inflation number, yes, that's part of the issue that we think affects the bond market. The amount of liquidity affects bond market asset price, because we need liquidity to fund day-to-day activity across the bank. So if the banks have some assets logged in some of these bond instruments, they probably want to sell down so that they can meet their daily cash requirements. So bearish sentiment in the bond market, there's a whole lot of issues. Apart from that, some provisioning for FX. Some of the provisioning for FX, the last few weeks, we've had a lot of back and forth with that. Huge amount of money provisioned for FX during the week, and amount will be refunded. All of these have impact on the amount of liquidity in the system. And with that, you have a lot of fixed income market instruments affected by what the banks need to do, what investors are pricing, and of course, all the pressure in the economy as well. You should expect investors repricing assets. There's a likelihood for MPC to probably raise NPR next week. Looking at what has happened to inflation, the last time we had a galloping inflation about 12.8%, MPC raised that number. They had to hike NPR by about 100 basis points. So with what we have now, 13.7 or thereabout percent inflation for April, there's a huge likelihood that the Monetary Policy Committee will also respond to NPR. So some of these are the big issues that will affect yield on bond yield going forward, and of course, investors are going to be looking at all these issues as they price it in.
What's your forecast? Most analysts are saying or are expecting a 200 basis points increase in NPR from the current number that we have. What's your forecast? What do you think will happen?
Well, for us, what we think is that if inflation is about 13.7% at the moment, real return is already negative. But the big issue is the fact that May inflation is going to be even higher, probably crossing 14%. So if you do that month on month, our number is looking at 16%. But you know, if we adjust it a bit for the fact that this price increase was mid-May, maybe we are looking at 14.5 or something close to 15. So if the MPC is going to do something really significant for MPR, about 2 basis points will make sense on what, 200 basis points will make sense on what we have. That way, you have, you know, been able to cross the likelihood of the higher inflation in May. So maybe 15% likelihood is not in doubt.
Wale, thank you so much for your time this morning and your perspectives as well.
Thank you very much for having me, Harriet. Good morning.
Good morning to you. Wale Olusi is investment analyst with AfriInvest, giving us his thoughts there on the fixed income segment of the market. So right now, investors cautious trading ahead of the Monetary Policy Committee meeting, which is starting on Monday in the nation's capital. It's a two-day meeting, a rate-setting meeting, and on Tuesday we get to find out the decisions reached by the members. Of course, Channels Business News will be tracking that for you. And we're tracking other developments as well, other conversations that you don't get to hear about here on television, but happens on the street, on the back end. So you can follow us on Twitter at CTV Harriet, at BBosin, who'll be glad to mind your business, at This Morning, or at Channels TV, the bigger brother, where we talk about all the issues happening in the polity, economics, politics, health, education. Whichever way you like it, we'll talk about it here. Follow all developments on YouTube as well, on youtube.com/channelsweb for all the programs that you missed. I'm Harriet Agbenyi. Thank you so much for being a part of today's show. Have a profitable day.